You got the federal tax, which is you bent over on your knees, and you got the state tax, which is you bent over standing up. Hydration. What's going on, everybody? I'm Sha, and this is the Dollar Tree. Make sure you hit that like button and subscribe. If this video gets 50 likes, we're going to give away a $20 Amazon gift card, all right? But you got to be a subscriber, so just make sure you subscribe to the channel. 51% tax. If you dive deep into the numbers and do your Google search, you will realize that federal taxes accrue, the federal taxes that the government accrue, the numbers aren't as astronomical as you may seem. Of course, based on 300 million plus Americans, of course, the numbers in the trillions, but that's not necessarily what I mean. So, when you talk about debt as well, in comparison to that, the spending to the income and the budgeting, spend way too much money on the military. There's way too much overall just debt. And now I'm going to prognosticate. There's a good chance that 51% tax is going to be a thing. I'm not trying to give any ideas, but it could be a thing within 20 to 30 years. That's my prognostication. And that's solely based on the fact of the amount of debt that has been accumulated by the United States over time. Rich country, small country, big country, no country, all right? Debt is debt, and it has to be paid back at some point. Remember, the U.S. dollar has nothing to do with the government. The Fed has nothing to do with the government, and the dollar is not backed by gold. It's not backed by gold, all right? Now, I want to talk about these countries that got crazy high tax rates, like France, 51%. I'm going to get into all of these other ones. I got my notes right here. We got France, Denmark, Belgium, Austria, Finland, Germany, Sweden, Hungary, Italy, the Netherlands, Portugal, Norway, Slovenia, Japan, Canada, Israel, all right? No particular order, but just letting you know, 50% tax, 40% tax is definitely in the cards. I mean, after all, that bracket on the U.S. tax bracket that I put up here, above $204,000, you're getting taxed at 35%. Above $500,000, you're getting taxed at 37%. Out the gate, that's near 40% of your earnings. It's ridiculous. But not as ridiculous as, 51%, 60 or 71%, which in my opinion, because of the world economy and the downturn, is realistic in 20 to 30 years. Maybe a little later, but that's just my prognostication. So we're going to briefly go through this taxes. I know this ain't the most exciting thing to look at, but very important information in this, of course. This channel is about learning whatever we can so we can make more money and, benefit from growing ourselves financially, all right? So number one, of course, put on the screen, I'm going to put up these tax brackets. Now, 100K total, based on these tax brackets, you get taxed just over $18,000. $18,173.92, all right? So right away, just on taxes alone, it's no longer $100,000. And it's unfortunate because you worked for 100, you don't get paid 100. You worked for 100, you get paid 100, and then your shit get garnished. And then let's talk about state taxes. Now, it's 5 states that do not have state tax. You got Texas is one. Hold on, let me bring this up. These are the states that have no state income tax. You got Alaska, Florida, South Dakota, Texas, Wyoming, and Nevada. All right, but for the ones who don't, New York, Los Angeles, they state income tax is ridiculous. They overall sales tax is ridiculous. It's crazy. So again, but I'll talk about the overall state tax, the sales tax, and the cost of living video. I'm going to break all of that down in the next video. Now, you guys can use this as a great staple and a measuring stick. Understand, you need to build up to 100K. So remember, you got federal tax and you got state income tax. So you got the federal tax, which is you bent over on your knees, and you got the state tax, which is you bent over standing up. The reason why you want to build yourself up to that 100K and beyond is so that you can establish your investment in your retirement fund to earn dividends. Why am I saying this? Because dividends are taxed at 15%, all right? That's a discount. You saw the bracket. I can put it back up on the screen. You make $400, $200, $300, $500,000 a year. That bracket, at that level, you're getting taxed 37%. Already between 84 and 100K, you're getting taxed at at 24%. You like, this is crazy. So you definitely want to take advantage of that. Have your dividends, file as a 1099, operate as a business. Always keep yourself active, and then use your write-offs. All right. I'm not saying dodge taxes. So quickly, I am not a CPA, nor am I claiming to be. Do not take my advice for filing your taxes, because I don't know your personal situation. And even if I did, you'd have to contact me personally, not to give you financial advice, but to just to go over what it is that you're going through. Anyway, if you want them thrills, once you finish getting a little bit bored while edifying yourself from these videos, I got the thrills. You can follow me on Instagram. I'm Leo Calm. You can follow me on YouTube. Subscribe to the channel. I'm Leo Calm. Yes. All right. So go ahead and add me over there. And remember, 50 likes, share the video, $20 Amazon gift card to one of those likers, as long as you're a subscriber. I can check that. All right. I'm Shy. This is the Dollar Tree. I will catch y'all next week. I will officially break down how much it costs for anybody who's younger. If you want to move out your parents' house, I'm going to tell you how much it's going to cost you. You want to be able to have certain stuff in your apartment, I'm going to tell you how much it's going to cost you. All right? I'm going to tell you how much it's going to cost you. All right. Cost of living is next week. I'll see y'all later, man.